Hello kind people of YouTube. As you can see, we have a lot to get through today. I have 7 articles open as well as CoinMarketCap. So let's just do this. Today, as always, we're looking at the markets and then I'm going through the news of the day. And I'm gonna give you my opinions on it. Because we have so much today, we're just gonna be reading the first couple paragraphs of each article instead of the whole thing. I hope you'll forgive me. The links to these articles are of course in the description. The description also has ways to support the channel, for instance donation addresses if you would like to help out, anything's appreciated, as well as my social media links and other good stuff like an email address where you can ask questions for my question and answer video. But let's get into it. Let us refresh CoinMarketCap here. We're seeing today, after a relatively bad day yesterday where market cap fell to about $215 billion, we are back up significantly at $218 billion, almost $219 billion, and most tokens up 1 or 2%, with some falling the tiniest bit, like Monero here down 0.17%. But in general, it's looking relatively good today, and we're seeing a bit of recovery here, but not that much movement. Bitcoin is performing a bit better today than altcoins on average and has increased its dominance to 52% after it has been in the 51% region for a couple days. Aside from that, not that much to see here. Nothing is doing particularly great or particularly badly today. Let's look at an analysis, shall we, from CCN. Within the past 6 hours, the cryptocurrency market has added $5 billion to its valuation as Bitcoin demonstrated an unexpected increase in its price. Throughout the week, Bitcoin struggled to demonstrate recovery in its volume and momentum as it fell below the $6,500 mark, a level which the dominant cryptocurrency managed to sustain for several weeks. Since August 9th, the price of Bitcoin has remained relatively stable in the range of $6,400 to $6,800. Apart from one instance in late September, during which Bitcoin tested the $7,000 resistance level, the asset has shown a record high level of stability since June of 2017. Earlier this week, the vast majority of technical analysts and prominent crypto traders expressed their negative stance towards the short-term price trend of Bitcoin. One trader who goes with the online alias Rampage stated that the declining volume and consistent demonstration of lower highs are expected to lead the price of Bitcoin to drop. Declining volume, weaker bounces, lower highs, demand is getting eaten up and it's just a matter of time until we break support for new yearly lows. There's nothing bullish about this chart, he explained. Since then, the volume of Bitcoin actually dropped even more, from $4.3 billion to $3.8 billion on CoinMarketCap. On CoinCap.io, the cryptocurrency market data provider of Shapeshift, which filters out exchanges suspected to have inflated volumes, the daily trading volume of Bitcoin hovers at around 2.57 billion, down 0.23 billion since October 2nd. With the same year-to-date chart of Bitcoin, several other technical analysts predicted the price of Bitcoin to increase in the short term as the market started to demonstrate seller fatigue and a decline in sell pressure. Declining volume, weaker sell-offs, recently higher lows, bears are getting exhausted and it's just a matter of time before no willing sellers remain and strong hands dominate supply. There's nothing bearish about this chart, one analyst said, and clearly this is in direct reference to Rampage's post, because he said there's nothing bullish about this chart, so this is a direct inversion of that. A bit of an attack, one might say. The decline in the volume of Bitcoin in itself could either represent fatigue of bears or general decline in momentum of the asset. Hence, in such a short period, the less risky approach is to wait it out and observe minor movements in the market. Given the slight bounce of major cryptocurrencies in the past few hours, it is likely that due to market exhaustion and seller fatigue, Bitcoin and other major cryptocurrencies will record minor gains in the short term. Already some tokens including OneChain, Verge and Eternity have started to demonstrate decent gains in the 4 to 5% range, with Ripple XRP recording a solid 3.5% increase in price. But the low volume of Bitcoin still remains as a variable in the short term. If the volume of Bitcoin fails to supplement its short-term increase in price, then a sudden drop in the valuation of the crypto market is also possible. Until Bitcoin breaks out of the $6,800 resistance level, however, no major movement to the upside is expected, especially considering the state of the market. So there we have it. That is what's going on, with experts disagreeing on where the direction of this market is heading right now. Once again, I'm going to repeat that to me it looks like if we haven't reached the bottom yet, we are very close to it. We see such a narrow range of trading the past couple of months. We're just waiting for the prices to shoot up, but that is just my opinion here. And you heard the opinion from CCN here, from who wrote this article. I don't think there's a byline here. Joseph Young. So that is their opinion here. I think it's important to keep these expert opinions, these technical analysis in mind, but to me it's looking very much like the market bottoming out and pretty much just waiting to explode. Because we've seen this in previous years. Anyways, to the next article. Report, blockchain and manufacturing market will be worth $500 million by 2025. This is one of two articles we have today where major companies that are in finance have released a report predicting huge market valuations for crypto markets. This time, in particular, blockchain in manufacturing. That is, of course, just a tiny part of the blockchain market. This is, for instance, not even that. I was going to say Walmart using blockchain for supply of lettuce, but that's not even manufacturing. That is supply. So this huge. We have seen some major tech companies announce that they are going to use blockchain to keep track of all their of all the individual elements that go into their products and stuff like that. Let's read the article. This one is relatively short, so this one I will read out fully. A recent report by technology research company Report Linker shows that blockchain technology in the US manufacturing sector is expected to grow significantly from 2020 to 2025. While preparing the report, the author split blockchain usage by application, end use, and territory. The study then divided the blockchain and manufacturing market based on end use into energy and power, industrial, automotive, pharmaceuticals, aerospace and defense, food and beverages, textile and clothing, and other sectors. According to the research, the blockchain and manufacturing market is expected to be worth $30 million by 2020 and grow at a compound annual growth rate of 80% to $566 million by 2025. Per the report, blockchain will simplify business processes and ensure transparency and immutability while eliminating intermediaries in logistics and supply chains. The authors cite several factors driving growth, chief among them being the growth of blockchain as a service solutions for businesses and significant increase in venture capital investment in initial coin offerings. However, the report claims that an uncertain regulatory landscape and the absence of a uniform set of standards are holding back the growth of the blockchain in manufacturing market. No complaints from me here, this is plain to see in my opinion. As long as there is any uncertainty about regulation, about taxing, about all this stuff, about the future of the market, people are less willing to jump in to invest a lot of money, time, resources on something that might be set up to fail if regulation comes down too hard. Anyway, back to the article. The MIPI Foundation, which conducts research and makes policy recommendations regarding the conditions of the American manufacturing sector, reported in March that as of January 2018, manufacturing output was 4.7% lower than in December 2007. Despite the slump following the 2008 recession, MIPI forecasts that the US manufacturing sector will fully regain all lost output by April of 2019. The foundation projected an average growth rate of 2.8% of the US manufacturing from 2018 to 2021. In August, Cointelegraph reported that Deloitte, I'm not sure if that's correct, Deloitte's 2018 blockchain survey revealed that the technology is gaining significant traction at the executive level of enterprises across diverse industries. 74% of respondents to the survey said that their executive team believes there is a compelling business case for the use of blockchain technology, with 34% saying that some form of blockchain deployment was already in development within their organization. So this, of course, one more reason for us to believe that blockchain technology and with it crypto and all our beloved tokens will find mainstream acceptance in the near future. It's looking like within 5 to 10 years, most major companies will be using blockchain technology, some with, some without a token, some with their own tokens, some with existing tokens in their within their companies, as well as within their payment processes, and I'm very excited to see what that has in store. But next up we have an even larger number, this time coming from Bank of America. Bank of America blockchain market could hit $7 billion, will give boost to Amazon, Microsoft. Now keep in mind, 7 billion, pretty big. Here they're talking about all of blockchain and not just blockchain in manufacturing. The Bank of America has estimated that blockchain could be a $7 billion market and provide a major boost to corporate giants such as Microsoft and Amazon, CNBC reports October 2nd. While Bank of America's analysts refrain from putting a timestamp on the industry becoming a major multi-billion-dollar addressable market, they reportedly based their estimates on a ballpark figure that 2% of corporate servers would be used to run blockchain at a cost of $5,500 annually. Bank of America research analyst Kash Rangan told CNBC that the technology is well suited to some of the world's largest corporations, noting for example that Amazon will benefit from incremental cloud services demand from blockchain implementation, while improved supply chain tracking should make Amazon's retail operations more efficient. Rangan emphasized, however, that while many potential use cases for blockchain have been widely recognized, full product services have not yet been built out and are not used in production, leaving the technology's capacity to generate real-world capital still unproven. Rangan added that the innovation of distributed ledger systems could take so-called software-as-a-service models to the next level by implementing blockchain as a service. Rangan chose Microsoft's popular blockchain-based Azure platform as a salient example, stating, "BaaS on Azure offers services such as smart contracts and other third-party apps, and should benefit as the use of blockchain on Azure increases." Among other high-profile beneficiaries poised to benefit from blockchain, Bank of America included Oracle, IBM, Salesforce.com, and VMware, as well as major players from the real estate and mortgage industries such as Redfin, Zillow, and LendingTree. Now that is pretty much as we need to read of this. The main thing to take away from here is that Bank of America, of course one of the largest banks in the world, is absolutely certain that blockchain will be a very large market in the future. They're not setting an exact date, but they think 7 billion is a realistic ballpark number for it to hit in the coming years. Another very exciting article number, all of this coming from these huge players in the financial world, should always make us happy as investors in crypto. And let's continue on with some Ripple news. Now this pretty much sums up some of the stuff that happened at SWELL. SWELL on October 1st and 2nd is their yearly conference in San Francisco, and one of the biggest crypto events in the world, and they always like to show off how much money they have there, this time by inviting former US President Bill Clinton as their keynote speaker, which probably cost them well over $1 million just to get him there. But anyway, I have talked briefly about some of the stuff that has been announced at SWELL, for instance XRapid going live already. And I was talking, I believe it was yesterday on the channel, about how I believe one of the reasons the XRP price fell a bit after SWELL is because people had unrealistic expectations, expected too much, and then when they got good news, they got disappointed that it wasn't great news. But anyway, I haven't talked about the conference that much yet, so let's take a look at this article because it sums up a lot of what happened there. The organizers of Ripple's two-day SWELL conference in San Francisco didn't beat around the bush when they named the final panel of the event the 800-pound gorilla. The question of crypto asset adoption was certainly on many of the attendees' minds, especially since Ripple CEO Brad Garlinghouse announced the previous day that XRapid, the company's product that leverages the XRP cryptocurrency for on-demand liquidity and cross-border payments, is now being used in commercial payments by 3 companies. At the time of the event, the combined value of all XRP in circulation was worth roughly $21 billion, with each asset trading for around 50 cents. XRP previously traded at above $3.50 earlier in the year, and at around 20 cents at the time of its inaugural SWELL conference last year. Representatives of 2 of the companies in question were on the panel: Brad Garney, COO of Catalyst Corporate Federal Credit Union, and Nicholas Palacios, CFO of Acrelix. The third company using XRapid commercially is Mercury FX. They were joined by Kwon Park, Head of Business Development at Bittrex, a cryptocurrency exchange that has partnered with Ripple to facilitate the fiat to XRP transactions at the center of XRapid, and Alfredo O'Hagan, SVP of Payment Services at IDT, a telecoms firm that provides international payment services and has trialed XRP in the past, XRapid. As might be expected from a group that uses cryptocurrencies in their businesses, the panelists were mostly enthusiastic about the adoption of digital cryptographic assets in cross-border payments. There's a big difference between XRapid and traditional systems such as SWIFT, said Palacios, in terms of cost efficiency, time efficiency, transparency, and customer experience. We see a lot of competitive advantage to this moving forward, Garney said of XRapid, given that sending international wires is costly, time-consuming, and not the cleanest process. Rather than thinking of the service as a totally new or alien technology, he added, it may be better to describe it as a digital wire, it's a faster wire. Garlinghouse perhaps captured the unsatisfactory nature of the incumbent payment infrastructure on the first day of the conference, when he said that the fastest way to move money from Kuwait to San Francisco was to put cash in his suitcase and fly it there. And I love this way of putting it, because that's exactly the problem. You have to keep in mind, international monetary transfers already take a pretty long time when you're transferring between economically strong nations, such as when you're sending from Germany to the US or to the UK. That already takes 2 or 3 days with the current SWIFT system, but if you want to send money to or from a place that is much more disadvantaged, that has less of an infrastructure, that has less money moving through it every single day, you often have to jump through a bunch of hoops, you have to go through other countries, your fees become ridiculously high, and it can take weeks for your international transfer to arrive. Weeks. That is where the real use case and appeal of xRapid and similar products lies. It will be very useful for most of us who live in commercially advanced countries with a strong infrastructure and a lot of international money flowing through it. But it will be utterly revolutionary to people who are living in developing nations, some even without a properly established banking system, where a lot of citizens don't even have bank accounts. xRapid, similar products using crypto tokens will be life-changing there, and that is where a lot of the potential profits will also come from, and a lot of the potential growth, because it's pretty much entire new markets coming into the international finance that were mainly excluded before. But anyway, back to the article. Replacing this system with crypto solutions isn't without its hurdles, however. As O'Hagan pointed out, we are regulated entities, so we have to make sure all the pieces are in place. The process of education, an oft-repeated word on the panel, doesn't only involve regulators, however, but internal risk management and compliance personnel, as well as banking partners. The corporate risk commitment had to be convinced, said O'Hagan, continuing, "The first time we mentioned cryptocurrency we got this," he imitated a loud exasperated sigh. He said he has seen up to a quarter of its international payment flow completely in cryptocurrencies, including Bitcoin, Litecoin, and whatever is best in a particular market in terms of the exchange rate. Gani, however, said that as far as regulators are concerned, to this point we've met with no resistance. Another important point here, Ripple and all the people involved with their technologies are in close contact with regulators. They have some former regulators on staff, so they have good connections towards that world. And one thing I see a lot of people worried about when it comes to XRP and to Ripple and to all their products is that there might be problems with regulation, and that is why I'm not that worried, because they constantly reassure us, and they have people on staff that only deal with talking to regulators, and they have former regulators, and all of this gives me hope that everything will be fine here. An earlier panel provided some cause for optimism on the regulatory front. Michael Didiak, I hope I pronounced that correctly, partner at the Seattle-based law firm Perkins Coie, said that he did not believe the US Securities and Exchange Commission, where he spent 8 years, would consider XRP as security. "I think it's a currency," he said, though he added that a surprise decision to the contrary is going to have ripple effects, no pun intended. Regulatory uncertainty and internal pushbacks are not the only barriers to mass cryptocurrency adoption in international payments, however. O'Hagan said if you look at xRapid as a hub, you need the spokes, you need the entities that will enable that last mile. The more companies that join in, the better we all are. In other words, part of what's holding back adoption is lack of adoption. Gani, however, did not appear to be worried about that, quipping in reference to other financial institutions, "I would be perfectly in favor of them staying on the sideline for a while." Now this of course gets us to Ripple's business strategy. They are slowly but surely rolling out their products. Xcurrent is already being used by a lot of finance firms, a lot of banking, but what they want people to use ultimately is xRapid, and they are now beginning the slow, continual rollout of xRapid for individual payment channels and with individual companies at first, but they're planning to get more and more people on that slowly but surely. Slowly, partly just because they need to make sure that everything works the way it's supposed to, and it's a lot less risky to start with a few companies when you can still iron out errors than when you're dealing with hundreds of large banks, because one major error or issue of another kind turning up once xRapid is already being used by major companies around the globe, that could kill everything to do with Ripple completely. That could end everything. So it's very good that they're going slowly and surely and cautiously. And it's also, you have to keep in mind, these large financial institutions, they have a responsibility to their customers to keep their money safe, to make sure everything is secure and that everything is working the way it's supposed to. So for any big bank, for any big financial institution to sign on to instantly use xRapid, that is a large risk. And that will happen slowly but surely when they seek success from these other companies. Continuing on. Abra Wallet and Exchange Service introduces token that tracks crypto index. Now this is interesting. Digital currency wallet and exchange Abra has launched support for a new token, BIT10, that tracks the Bitwise 10 large cap crypto index, according to an announcement published October 3rd. So this is very much in line with something we see in the traditional finance market, and that we haven't really seen that much in crypto yet. So crypto very much maturing here. The Bitwise 10 large cap crypto index was developed by cryptocurrency asset management firm Bitwise Asset Management and is reportedly listed exclusively on Abra. The index tracks the 10 largest cryptocurrencies by market cap, currently representing 80% of the total crypto market cap. Per the announcement, any investor is now able to acquire the BIT10 token through the Abra app with a $5 minimum investment. Hunter Hursley, the CEO at Bitwise, said, "Index investing is extremely popular in stocks, bonds and crypto because it gives investors diversified exposure without having to constantly monitor news and try to predict which assets will be most valuable. So far in the crypto space, index investing has only been available to institutions and accredited investors. The cost of each BIT10 token reflects the value of 10 coins in the index, while the token's positions are reportedly held in multi-signature smart contracts on the Bitcoin or Litecoin blockchains." The press release further explains the operational principle. Once invested, Abra and the user are entering into a smart contract that effectively pegs the asset invested, either fiat currency or cryptocurrency, to the same amount of BIT10 tokens. Abra will get a real-time price feed from Bitwise Asset Management, and the BIT10 investor will see the market movement up or down reflected in the price of their BIT10 tokens. Last month, Abra enabled the direct purchase and sale of cryptocurrencies for European bank accounts. Customers can now transfer euros or several other national currencies directly to their wallet, which can in turn be converted into the 28 cryptocurrencies currently supported by Abra. In March, Abra's CEO Bill Barrett, I hope I pronounced that correctly, I know I'm always apologizing after every name, forecast that all hell will break loose in Bitcoin and altcoin markets this year. He said that he talked with a hedge fund, high net worth individuals and speculators who saw a huge opportunity in the volatility in the crypto markets. Once that happens, all hell will break loose. Once the floodgates are open, they are open, he added. So this is very interesting. I believe this is the first of its kind just for normal everyday investors. So far, only institutional investors have been able to use an index token like this. This, of course, if you want a bit of a more secure investment but still to be diversified, this might be a good idea. You're essentially investing in the top 10 cryptos rather than buying individual tokens. And this way you will probably be tracking the general market movement. So if you're unsure which individual token you believe will do well, if you're not the kind of person to follow the news closely, or if you just don't want to deal with the stress of only being invested in a handful of products, this might be an option for you. Let's continue on. John McAfee linked Bitcoin mining firm hit with lawsuit over pump and dump scheme. This is not nice to hear. Now, of course, McAfee, not a stranger to controversy at all and to bad news around him. But this is pretty severe and, of course, very bad for the crypto world to see news like this. But we gotta keep in mind here that McAfee is not working with the company anymore, to my knowledge. Let us look at the article. It's not too long. MGT Capital Investments, a Bitcoin mining and cryptocurrency investing firm formerly associated with John McAfee, has been hit with a class action lawsuit over allegations that its former CEO participated in a pump and dump scheme that manipulated the price of MGT shares. The suit, which was filed by Rosen Law Firm on behalf of current and former MGT shareholders who purchased MGT securities between October 2015 and September 2018, follows a SEC investigation into a stock pumping scheme that involved former MGT Capital CEO Robert Ladd, who stepped down after being named in the complaint. That pump and dump operation, as TCN reported, consisted of a group of 10 investors and corporate executives including Ladd, former Wired Blockchain CEO John O'Rourke, and billionaire Philip Frost, who allegedly conspired over a period of several years to generate more than $27 million in unlawful stock sales by manipulating the prices of penny stocks. Though not explicitly named in the SEC order, it is clear from the agency's complaint that the pump and dump group used dishonest promotion and manipulative stock trading to drive up the price of MGT shares, enabling them to net more than $9.4 million during a period of just 2 weeks. Some of that alleged dishonest promotion was related to MGT's acquisition of a company owned by an unnamed cybersecurity innovator, almost certainly John McAfee. Upon joining MGT, McAfee served at various times as executive chairman and CEO up until his resignation in August of 2017. While McAfee was not named as a defendant in the SEC's complaint, he is listed as a defendant in the class action lawsuit. Citing copiously from the SEC order, the Rosen law firm's complaint alleges that MGT and the other defendants violated the Securities Exchange Act on 4 counts, all involving various components of the pump and dump scheme. The suit requests that the court order MGT to pay damages to shareholders affected by the manipulation of MGT shares, cover the plaintiff's court costs, and award further relief to aggrieved parties. When reached for comment, MGT spokesperson told CCN that the firm has the utmost confidence that the suit is without merit. MGT has the utmost confidence that the suit filed against them is without merit, the spokesperson said. This is not a departure from normal affairs in securities markets when share prices are down. Previous cases along a similar vein were thrown out without prejudice. So you can read the entire complaint down here. Now, it's very hard to tell to which degree McAfee has anything to do with this directly. He did seem to be the CEO for at least part of the time this happened, so it does seem likely that he was aware. But we will just have to wait and see. Who knows, these implications could be completely, these accusations could be completely unfounded. We won't know until some point in the future. But this, once again, is just this will definitely hit mainstream news. And someone this big in crypto like John McAfee, especially with it being a Bitcoin mining firm, being hit with a lawsuit like this, with a manipulation lawsuit, that is a bad look once again for all of crypto. Let's hope this turns out to not be real, because yeah, let's hope that. And now final thing here. Vote buying scandal stokes fears of EOS governance failure. Now, we don't have to read the whole thing here because it's relatively long, it's a feature article, so there's a lot of information and discussion in here, and I absolutely suggest you read it. I'm just going to read the first couple paragraphs so we know what's going on here, because EOS, I talk about EOS a lot, I'm invested in EOS, I'm generally positive on them, but I feel like we can't just ignore negative news, so I feel a responsibility to talk about this. EOS investors can't say they weren't warned. What was foretold in a March blog post by Ethereum creator Vitalik Buterin might have come to pass on the world's 5th largest blockchain, with a bout of vote-buying drama rocking the $5 billion protocol over the weekend. That's when a Twitter account named Maple Leaf Capital produced screenshots from a leaked Excel spreadsheet that supposedly showed the China-based exchange Huobi, one of the world's oldest and largest, accepting money for its support of certain entities in the charge of ensuring the network's distributed decision-making. The allegation is notable as EOS has only 21 block producers, trusted entities periodically elected to maintain the history of the blockchain, and that receive rewards in the form of cryptocurrency for doing so. No one can verify any of the claims made in this thread, nor the provenance of the spreadsheet's data, Huobi probably denied all the accusations. However, that doesn't mean damage control isn't being done. Block One, the creators of the EOS.io software for which they raised $4 billion in a nearly year-long initial coin offering, issued its own statement on Tuesday. It reads: "We are aware of some unverified claims regarding irregular block producer voting and the subsequent denials of those claims. We believe it is important to ensure a free and democratic election process within EOS and may, as we deem appropriate, vote with other holders to reinforce the integrity of this process." Accusations of wrongdoing aside, the controversy illuminates deeper issues, adding fuel to the fire for those who allege the EOS protocol may have an incomplete approach to governance. At the simplest level, the debate is over whether block producers should be allowed to pay other people to vote for them. The EOS interim constitutions, documents designed to put forth rules for participants on the network, clearly ban vote buying, but that constitution has never been ratified by EOS users. Yet at the same time, EOS seems designed for block producers to support other block producers. Block producers earn tokens and have an interest in the long-term health of the protocol, so some argue it seems natural that they would and must use those tokens to support other block producers they have collaborated with and believe to be good stewards of the network. Kevin Rose, community manager of EOS New York, a block producer since launch, acknowledged the point but told CoinDesk, profit sharing and vote trading, which compromise an organization's ability to remain independent, is the issue. Huobi did not immediately respond to a request for comment. Block 1 declined to provide additional comment. So here the issue we see is that essentially 24 people or 24 entities, 21 entities control what happens on the EOS blockchain. They get to vote on new protocols, on changes to the constitution and all that stuff. And the question here is, when you have so few voters, what happens when people start buying votes? Because with only 24 voters out there, essentially if you're one of the block producers and you buy 10 other block producers' votes, that is already enough to swing a vote your way. In some cases it might be enough to buy 1 or 2 votes if you know what they're going to look like anyways. And this is of course an issue for a platform that is supposed to be decentralized. Now I think it is definitely possible to implement a constitution that comes down on this heavily. Now that will never solve the problem that it will always be possible for people to somehow sneakily come to agreements where they pay someone in some way to vote in a certain way. You can never get rid of that completely. I mean, we have those same issues in governments, in senates and stuff like that. But what you can do is implement a constitution where if something like this comes out, where we get evidence that something like this has happened, the people get completely blocked off the network, the people get thrown out, and a new block producer is instated. And I think that is the direction they have to go to if they want to deal with this issue in the best possible way. And also it will help their image significantly, because right now, while EOS is very centralized in some manners, there's a lot of criticism that in this way it is not at all centralized, and they could improve their image by making sure they're coming down hard on stuff like this. Now these accusations are not verified, they might be completely false, they might be real, but they show an important issue with how they're doing stuff right now, and it definitely needs to be addressed. But nonetheless, I see the potential in EOS and I'm generally still positive on it. I just would like to see them come down pretty hard on stuff like this and implement a constitution where it is absolutely clear if you get caught buying votes like this, you are off forever, you are out of the EOS network. You're allowed to hold tokens, but not to be a block producer or anything like that. And that is, I think, how it has to be, and I hope that is what they will implement. Anyways, this was a long video, over 30 minutes. If you're still with me, thank you very much. Make sure to subscribe if you want more videos like this. I do them daily. If you like my content, want to support the channel, I accept donations in Bitcoin, XRP, Ethereum and Cardano ADA. The donation addresses are in the description, as well as PayPal donations through coffee.com, also in the description. Anything is appreciated. All these links will be down there as well, and an email address where you can email me questions for an upcoming question and answer video that I really want to do soon. But I still need a few more questions, so keep them coming. Anyway, I'm gonna end this video here. Thanks so much for watching, and I'll talk to you guys at the latest tomorrow.